Welcome to the third quarter of DE Asset Management. So this is our third quarter video for 2020. We want to welcome all our stakeholders and all our viewers. Thank you so much. So it's a bit of a change in 2020 dealing with COVID-19. How basically we had lockdown of all the markets worldwide for a long while, but we are back up and running. We are active right now. So I want to introduce someone who is new to our company now, Daryl Jr. So what do you intend to accomplish?
I want to work one day in a software company, and so I want to be a software developer. And right now, I'm building my work experience in DES management.
Good. So what's your role here going to be here at DE Asset Management?
I oversee DES management's social media, and I work in IT, and I'm working right now to start creating code.
Good. So he's gonna be uh, one of our software designers later on, right? Creating code and so on. So in the third quarter here, what we have seen here at DE Asset Management is that the markets are now starting to reflect the effects of COVID-19, of people being off work for so long. And so what we have happening is the American markets, they're really fighting to get back to activity, also here too in Canada. So at DE Asset Management, we have always been actively reacting to the trends that we are seeing in the economy. So back in 2010, when gas prices was high, we created green ethanol at that point to take advantage of having lower fuel costs with a biofuel company at that time. In 2017, 2018, 2019, we created a 3-year strategy where we were heavily into blockchain because we saw the activity in blockchain and we wanted to get involved in it at that point. So this year, what we saw is the increase in gold prices and also the opportunity for further increases in gold prices, right? And that is why we created the company DE Gold, right? Because we directly connected to the gold markets, and we are excited and really the possibility of the rise in the gold prices. So a little bit of the numbers that we are seeing. So the gold markets hold near the highest level since 2011. So just a little bit of info on 2011. So 2011 was the highest gold price in history. Okay, so in 2011, this is August 2011, gold prices were at 1,852.85 per ounce, right? So now we are seeing it at $1,775.90 per ounce, right? So, which is a massive jump from from where it was before in 2014 and such. Okay, so we are really seeing this rise because of COVID-19. First off, right? COVID-19 is creating a recession, right? So we all already were expecting a recession because of the yield curve. If you remember, if you look at my earlier videos, we spoke about the yield curve and it's signaling a recession. COVID-19 is bringing the recession closer, right? Because there were very little work happening in the United States and, well, internationally, it's really bringing the recession closer. So what we have is analysts predicting a very steep rise in gold prices because, as you know, gold is used as a buffer for for recessions, right? So we have the Bank of America analysts forecast a 80% rally over the next 18 months, right? And that is as central bank stimulus and the economic turmoil drive the record interest rates, right? So this information I get is actually the source is from the Business Insider. So we had the Bank of America analysts. They raised their further targets. So they had a target first at 2,000 for the next 18 months. They lifted that 18-month target to 3,000. So we're talking about 3,000 per ounce. Right now we're at 1,775. They're saying 3,000 per ounce, right, in the next 18 months. Right, so in March alone, we had the G7 central banks. They bought nearly $1.4 trillion worth of assets to calm the markets. Okay, so this is all in response to COVID-19 and the lockdowns we had, right? They had to put money into the markets to keep the markets going. So what is happening now is really because of the scarcity of gold, right? It would pummel or push the prices up, right? So unlike currency that you could create more currency and so forth, gold, there's just a limited supply of gold, right? So as central banks and other big companies are all trying to hold on to something valuable, the real thing, which is gold, we will then see an even bigger scarcity of gold, therefore bringing up the price of gold. So that is why then, with seeing this trend, our company, DE Asset Management, decided to create DE Gold because this is a direct play on the gold market. So going forward, we are still actively now raising capital for DE Gold. And really, we believe by the end of the year, we are looking to have as much as 3,500 ounces of gold. And investors out there, we really strongly believe that this is probably the best place to be in as we go forward with the economy the way it is now and how it will be later on. All right, so we're going to talk more and more about this as we go because it's pretty exciting times. But we want to thank everyone for viewing and looking at us here at DE Asset Management, and especially at DE Gold. So the website there is degold.net. All right, so thank you again. This has been Daryl Emmanuel and
Daryl Jr.
Yes, for DE Asset Management third quarter video. Thank you very much.